Welcome back to the Iraqi Dinar channel, your trusted source for breaking updates, insider insights, powerful news surrounding the Iraqi Dinar revaluation and the global currency reset. Today's headline carries massive weight across the investor community. Reports are emerging that Chase Bank and designated redemption centers have begun processing dinar exchanges at higher rates, sparking immediate reactions across America. Our buzzing Telegram groups are overflowing with speculation. Private chat rooms are lighting up with urgent conversations. Even professional financial circles are alive with chatter. The whispers suggest that Chase Bank desks, working in coordination with select redemption centers, may be rolling out exchange opportunities at rates beyond what the public markets currently display. For many, this is not simply another rumor to be dismissed. It feels like a genuine turning point after decades of anticipation. Chase Bank's involvement in this narrative is especially significant. As one of the largest and most established financial institutions in the United States, Chase has long been positioned as a critical player in managing international financial operations. Beyond the day-to-day functions that ordinary customers recognize, checking accounts, deposits, mortgages, Chase has a deeper infrastructure that stretches into corporate finance, global wealth management, and high-value foreign exchange. Over the years, countless insider discussions and reports have pointed toward Chase being quietly prepared to facilitate foreign currency exchanges on a scale much larger than typical retail operations. According to these consistent whispers, Chase has set aside specialized departments and even created discrete physical areas within select branches. These areas, separate from the public facing teller lines, are designed to handle the unique requirements of high value currency transactions. The logic behind this preparation is straightforward. When an individual arrives with millions of dollars in foreign currency, that transaction cannot possibly be managed alongside the ordinary flow of customers cashing checks or making small withdrawals. The risk, the complexity, regulatory oversight required are entirely different. Specialized staff are needed, trained in compliance, currency verification, fraud prevention, and client handling at a level that ordinary tellers would not be able to provide. Reports suggest that these secure areas inside Chase branches are heavily guarded, discreetly designed and intended to operate almost like miniature financial command centers within the broader branch structure. The persistence of such claims over years, often surfacing in different regions, has built a foundation of credibility that Chase is preparing for something far beyond the scale of ordinary Forex transactions. Closely tied to Chase's alleged preparations is the concept of redemption centers. Unlike regular bank branches, built to handle a wide variety of small to mid-level financial activities, redemption centers are described as off-site facilities designed specifically to process large-scale exchanges. The reasoning behind them is both logistical and security-based. If large numbers of investors were to suddenly flood into local branches with stacks of foreign currency, disrupt daily banking operations, and create enormous security risks, redemption centers provide a controlled, secure, private environment where these transactions can be handled efficiently. According to multiple insider accounts, these centers are equipped with advanced verification technology, armored transport access, and highly trained staff capable of navigating high-value exchanges. Many accounts also describe them as appointment-only facilities, reducing risk by ensuring that each client is processed without unnecessary exposure or public attention. One of the strongest themes emerging from insider discussions is that what may currently be happening is not a full public rollout, but rather a carefully managed testing phase involving Chase Bank and redemption centers. The idea of a soft launch makes sense when considering the scale of funds involved. If billions or even trillions of dollars in aggregate were to begin flowing through the system, every part of the infrastructure would need to be tested in advance. Insiders describe this as a rehearsal before the true opening night. Banks must ensure that authentication tools work flawlessly. Armored transport arrangements are executed without delay, and trained staff can manage high-pressure transactions without error. Elite clients or trusted individuals to quietly test the system provides feedback and confirms that processes are functioning properly before they are open to the wider public. Concept of elite client exchanges has also gained traction. In financial history, banks and governments often begin with their wealthiest or most trusted clients when introducing new systems. These clients offer both a contained environment for experimentation and the confidentiality required to avoid premature leaks. If these clients are already exchanging currency at redemption centers or through restricted Chase Bank desks, would confirm that the infrastructure is live and capable of processing transactions end to end from deposit to digital settlement. Reports also suggest that restricted banking screens visible only to select departments may already display updated rates, signaling operational readiness. Region experts looking at these developments add layers of interpretation. Some suggest Chase's involvement could indicate alignment with the U.S. Treasury, giving the effort legitimacy and a regulatory umbrella. Others emphasize that redemption centers themselves represent preparation for an extraordinary mass event. Analysts also caution that even if insider exchanges are occurring, public access may follow a phased schedule dictated by economic or geopolitical conditions. For investors who have held on through years of uncertainty, preparation now becomes critical. The first step is to ensure that all documentation is organized and ready. Banks and redemption centers will require government-issued identification, such as a driver's license or passport, and they may also ask for proof of purchase to verify the legitimacy of currency holdings. Receipts, notarized statements, transaction records can make the process smoother and prevent unnecessary scrutiny. Having these documents in order provides confidence and helps avoid delays when the opportunity finally presents itself. Another important element is awareness of rates. Rumors continue to circulate across online platforms, but investors should remain focused on verified banking channels rather than speculation. Falling victim to misinformation or scams could result in costly mistakes, especially at such a sensitive financial juncture. Remaining patient and discerning allows holders to act wisely when official numbers are released. Equally important is mental preparation. Walking into a redemption center or private banking office with potentially life-changing sums at stake can be overwhelming. The atmosphere may feel tense. Magnitude of the decision can weigh heavily. Approaching the process calmly and professionally ensures clear thinking and prevents rash choices that could affect long-term outcomes. Strategic planning is another consideration, and that should not be left until the last minute. Some investors may choose to redeem all holdings at once. Others may prefer partial exchanges to balance tax obligation or respond to market changes. Structured payouts may suit long-term goals, while immediate liquidity could better serve other circumstances. These are deeply personal decisions that require reflection and, ideally, consultation with trusted financial professionals. The emphasis is on discipline and foresight rather than treating the process like a gamble. By preparing documents, strategies, and mindset in advance, investors can position themselves to navigate the process with clarity and confidence.